Hey, what's up traders? Welcome back to IX. Today we're talking about something every Forex trader needs to know: currency pairs. We'll dive into major, minor, and even the spicy exotic pairs. And no, we're not talking about something that you'd find in a fancy restaurant. So buckle up, this is gonna be a comprehensive but simplified breakdown. So let's go. First things first, what is a currency pair? In Forex, you're always trading one currency against another. So a currency pair is simply two currencies being compared. One is the base currency and the other is quote currency. For example, Euro USD means you're comparing the euro to US dollar. When you see Euro USD at 110, that means 1 euro is worth 1.10 US dollars. Simple enough, right? But not all pairs are created equal, and that's where major and minor and exotic pairs come in. Let's start with the big players, the major pairs. These are the most traded currency pairs in the Forex market, and they all involve the US dollar on one side. Why? Because the US dollar is like the global superstar of currencies. It's involved about 88% of all Forex transactions. So think of these as the earliest celebrities of Forex wars. You've got the classics like Euro USD, Euro to dollar, GBP USD, pound to dollar, and USD JPY, dollar to yen. These pairs have tight spreads and tons of liquidity, making them a popular choice for traders. Next up, we have the minor pairs, also known as cross-currency pairs. These pairs don't involve the US dollar, but they're still super popular. For example, Euro GBP, Euro to pound, or AUD JPY, Australian dollar to Japanese yen. These pairs are a bit more unpredictable compared to the majors because they have less liquidity, meaning the spreads can be a bit wider. It's like going from the main stage to the second stage at a concert. You still got action, but not quite as much. Now for the wild cards, the exotic pairs. These are pairs that involve one major currency like the US dollar or euro and one currency from a developing or emerging market like the Turkish lira or Mexican peso. Trading exotic pairs is like riding a roller coaster blindfolded. High risk, high reward. The spreads can be huge and the price movements can be, let's just say, exciting. You could make some big gains, but you could also face some pretty wild losses. So if you're feeling adventurous, these are the pairs for you. By the way, if you're enjoying this breakdown, don't forget to hit the like button and subscribe to IX channel for more awesome Forex tips. It really helps the channel, and I promise we've got a lot more content coming your way. Alright, so why do these categories matter? It comes down to liquidity and risk. Major pairs, because they're so heavily traded, have tons of liquidity, which means it's easier to get in and out of trades quickly and at good prices. Plus, the spreads are usually tighter, so your trading costs are lower. Minor pairs have a slightly wider spreads, and exotic pairs, well, those spreads can get pretty wild and price movement can be more volatile. But with greater risk comes the potential for greater reward. Just make sure your risk management game is on point. Here's where things get interesting. Currency pairs are affected by a ton of factors: economic reports, interest rates decisions, political events, you name it. For example, if the US Federal Reserve hikes interest rates, you'll likely see the US dollar gain strength other currencies. Or if there's political turmoil in a country, their currency might weaken. So staying informed is key. You don't want to be blindsided by a news event that spikes volatility in your trade. Keep an eye on that economic calendar. So, how do you choose which currency pairs to trade? Here are a few tips. If you're just starting out, stick with the majors. They're more stable and have tighter spreads, which makes them easier to trade. Don't just focus on one pair. Diversifying can help you manage risk. Maybe try trading a mix of majors and minors. Remember that different currency pairs are more active during different times of the day. Like the AUD USD would be more active during the Australian and US sessions. And that's a wrap on currency pairs. Whether you're trading the majors, minors, or exotics, understanding how these pairs work is the key to navigating the Forex market successfully. Thanks for watching. Don't forget to like, subscribe, and hit the bell to stay updated with IX. Drop a comment below which currency pair do you trade the most and why. See you in the next video. Keep trading smart, and as always, may the pips be ever in your favor.